Good evening, ladies and gentlemen. Today is the 30th of June and today is Wednesday, so one day before the expiry. More or less opened slightly positive and then became aggressively positive with a lot of in the money put shorting going on and marking looking like ended up looking really, really strong. And this entire time I did have a relatively bearish view, and but it kept getting tested by the fact that the market kept moving up. Regardless, we had a shakeout in between, and in that shakeout, there was quite a big spike in put side IV, and I had to take a exit because I was trailing my stop loss. I had to take an exit. Paid quite a bit in terms of slippage for exiting my position. After everything, managed to close slightly in the positive. After charges, will just be slightly in the positive. Um, was not the greatest day for me personally. I think it could have been all right for most people though. Even if they were straddling the 15,800, should have been a pretty good day. As I say this, it's about 2:20, so I don't know what happened for the rest of the day. But I took the exit because at that point I had already made up my mind to exit at a certain mark to market, and I didn't want to push it. And since there was a considerable spike in IV, I mean, one of the trades could have been re-enter. I just decided not to do it today, and instead I will trade tomorrow for the expiry. Thank you so much for watching. Have a great evening, and I'll catch you tomorrow. Take
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So we are opening slightly gap up, so slightly positive. Asian markets right now are very neutral. US futures are in the green. Yesterday, US markets closed in the green. Not a lot has changed between yesterday and today. And Bank Nifty opening exactly at 35,000, very flat since yesterday. Now, there are a lot of shorts built up in the system at 15,800, 850, 15,900. And yeah, it will need some kind of a trigger to push these people out of position. So I don't think it's going to happen just like that. And right now, there doesn't seem to be anything that is going to trigger such a reaction. Meanwhile, my idea for the day is today being Wednesday should be able to benefit a little bit from the fall off in premiums, and just going by the recent swing high and swing low. So twice we've headed to 15,900 and it's selling from there. So 15,900 is a good call to short, and as of now 15,900 is getting into that ceiling territory on the upside. On the downside, we see a lot of the time there are some aggressive dips, but then once again the dip is getting bought. uh, Yesterday, though, for the first time, you can see that we actually trended clearly down the whole day. So regardless, the idea for me will be to work with this recent swing low. So 15,650 thereabouts strike on the downside. So we'll keep you posted. The time is 9:11. Okay, I have just entered the position. What I've done is I sold the 15,900 call. I'm quite certain this will hold. Into the opening, we continue to see an up move. So I position it in such a way that 60% of my puts sold are at 15,650 and about 40% are at 15,700. Now, in case we continue to trend higher and these calls really start to expand, we'll slowly move these puts over here. And in case we start to see a sell off from here, then I will have the flexibility to move these puts down. So that is more or less the plan for now. I'm expecting, so there is a burst of put writing in the morning and some amount of call unwinding at levels lower than 15,800. So this would tell you that a lot of positioning around 15,800 is going on. And currently, this is a comfortable position to begin. And considering that today is Wednesday, should be getting a pretty good fall off in prices, possibly about 10 points on this current position, at least the 15,650 and 15,900. There will be potentially more on the 15,700, 15,900 if we hold range, but this position will not be in this width for a long time. Okay, so 15,800 is seeing selling, and Bank Nifty is holding below 35,000. So it's not showing some kind of big buying from 35,000. and that is acting as a resistance. So because of that, I have squared off uh, these puts. I had about 40% of my puts at 15,700, squared them now, and rolled them to 15,650. I think that is the comfortable range of 250 points, and should more or less be fine for the day. Yes, it was a very early risking off on the puts despite having only 40%. That's because I just wanted to wait and watch what happened around the 15,800 mark. And since there isn't exactly much momentum or strength that will force some kind of a short covering move, there's no strength anywhere. There's no strength in Reliance holding below 2100. Bank Nifty is looking quite weak. IT is slightly positive, but not a lot happening there. So all that being the case, rather than having to sit on these puts, I would prefer to have a slightly negative view only below 15,800. So if we start heading above 15,800, this position is going to bleed because then the delta will be negative. So slightly negative view above 15,800. So we'll keep you posted. The time is 9:32. Okay, the 250 point triangle has about 26 and a half, 27 points in it. This should close it somewhere close to possibly 18, 17, 18, 19, something on those lines. Uh, Maybe even lower, depends on what happens where the spot closes. The hedges will lose at least 1 point if that is the case. If we close exactly at 15,800 towards today's close. This is going to cover some of the covered call positions. So on Wednesday last week, I purchased this future and hedged it immediately with a monthly call at 35,000 on Bank Nifty future is in good profit. You have to see there are multiple different expires. This is August, this is July, and this is weekly. So its future is in August because whenever August comes around towards the end, I'll roll this forward by another 2 months and I'll keep taking credit on shorter expiries. So currently this is more or less at break even. This is at a profit, the future, and the weekly call most likely is going to give the entire profit. Now I will wait for some kind of a green up move where calls expand, and at that point I will close off this weekly call and then switch to the next week. Same thing in the Nifty. I've highlighted here. The bought the August Nifty future, sold the 15,800 call as a hedge. Future is in a slight profit. Hedge is also in slight profit. And the weekly call that I took, this was on a 2:1 basis. So for two quantity of future, one quantity of call. So that also has given up all the 40 points that it had. Same concept here. Wait for some kind of a green situation and then take more weekly call credit, or maybe towards tomorrow. I'll see, depending on what's happening in the market. So, because at this point, these weekly calls have no value. They're just sitting around waiting to be squared off, and then the new weekly call position has to be taken. HDFC, ICICI, Larsen are all covers for my shares, and they're doing all right. M&M cash secured put doesn't look like much is happening there also. Reliance 2300 call, very good price that I got it at 91, now at 16. Now into the dip, I want to sell Reliance put options, but the thing is that I have Reliance shares already, and I want better pricing of puts on RIL to take that trade. So I haven't done that yet. And cash secured put on TCS, which as of now doesn't look like anywhere close to being in the money towards the end of expiry. There's a lot of bullish sentiment around IT, and the rupee continues to depreciate against the dollar, so that's always a good for IT. So about 26 and a half points in this triangle itself. We'll keep you posted. The time is almost 10 o'clock. So far, since we've opened, we've been quite sideways. We had the immediate up move at the onset. That has more or less just fizzled out. And Bank Nifty continues to hold below 35,000. Okay, we continue to see an up move now with a big break on IT. So a strong upside break on IT, and into that move I have no option but to take additional put side credit, because these calls will expand now, and more or less it will be at some point just like I have naked calls short, because the 15650 put really doesn't have much value for it to fall off more from where it is. So what I'm expecting is maybe Currently, this, as long as this up move continues, it will have to neutralize delta at now 15,800. So I guess the initial hypothesis didn't play out, and we continue to see an up move. These calls are expanding. There is a call side IV spike that is taking place now, without a similar fall off on the put side, and it is something that we'll have to sit through for now. We'll keep you posted. Time is 10 o'clock. Quite a strong up move, mainly coming from IT, but Bank Nifty also participating. So we now have 100% gain in open interest. So almost about 20 to 23 lakhs of put options written at 15,800. Most of this would be to cover existing shorts on the 15,800 call. We're not particularly seeing much unwinding, but into the up move towards the past 15 minutes or so, there has been some amount of unwinding in the 15,800 call. Some amount of unwinding. None at the 15,900, but obviously into the rise, we will see expansion on this call. For now, I'm not going to do a lot. What I'm going to do is keep a 4-point stop loss on this position. At any point, if I'm down 4 points, I'll just take the exit. Will not make much sense because right now it looks like some kind of short covering is being triggered, and that will expand these calls. And at the same time, I don't want to take additional put side credit. So we'll keep you posted. 4 points is fair enough considering that today's a Wednesday. We'll keep you posted. Okay, so far we continue to head higher. Bank Nifty is now at 35,200. Now we'll have to see if there's some resistance there or not. But if basically we start heading towards 15,850, then I will just cut the entire trade because at that point my view would have just gone wrong, and I think I should be able to do it with more or less a damage control situation. So what I will end up doing in that case is just squaring this off and moving it to 15,950, and that will more or less uh, risk off the entire position because basically at this point this position is a very bearish. It is a bearish position by my style. So that being the case, we'll keep you posted. For now, Bank Nifty is just hovering around 35,200. IT after the initial up move is flat. Reliance really not doing much. Majority of this has come from Bank Nifty. At any point, also, I'm also trailing the stop loss, and that stop loss will invariably be at the verge of hitting. Even if you say 4 points from whatever mark to market I'm currently at, it will hit around 15,850. Okay, so first sign that some profit booking is coming in of about 10 points, really, not much more. And that has been enough to really lead to a fall off in the call price because whatever fear was there to cover the 15,900 was unnecessary, but whatever expansion has been seen is now deflated. Not a lot, we're not even halfway through the day yet, so we'll keep the same range and see where things go from here. Not even halfway yet. Okay, some stuff changes now. Reliance, with almost no volume, but has made a break of about 10 points in a single candle on a 5-minute time frame. Now it'll be interesting to see if volume builds and this leads to some kind of an up. If Reliance starts moving, then the entire premise of the trade will change. And at current pricing of the 15,950 call, it's not worth rolling up my calls or anything. So the only option will be to either take the exit or take on additional put side credit, which will be the criteria in case volume starts building on Reliance and starts to make like a 20-30 point move. So it has to be a good pickup on RIL because the entire trade is working with RIL not moving from 2100. So that changes. The trade also changes. Keep you posted. Time is okay. So what is happening clearly is that suddenly there seems to be some kind of potential strength that can build in RIL. So what I've done is I have taken on some put side credit into a red candle. I have taken on more put side credit. Now I'm sitting on roughly about 40 points of credit. And yeah, Bank Nifty is not looking so good, but clearly it has shown that there is demand for buying at the 35,000 range. That's why I have taken on additional put side credit for now. In case we start heading to 15,800, then I will be risking off these puts very quickly and moving them back to 15,700. Keep you posted. It is the halfway mark now, and there's enough premium on both our strikes that a slight move here and there for a while should give us some reaction time. Okay, so right now the situation I'm in is okay. So we called the up move, right? And on Reliance, which is now 20 points above 2,100, and the up move being complemented by IT as well at the same time is leading to a rise in the Nifty, and that is spiking these calls. These puts aren't particularly losing much now. That's the situation. So my option now is to this overall strangle value gain that is taking place to either sit through it because we are now at the day's high, more or less, and or take the exit. So I'm going to sit through it because today is the Wednesday. This whatever spike, either these puts have to give up value or these calls have to give up value. That is going to happen. What has happened is there has been a larger gain in the calls than there what reduction has been there in the puts, despite we basically being at the point of neutral delta, which is 15,825. So I'm just going to sit through this for now, and I'm still comfortable doing it because it's a Wednesday. The puts were moved up to protect these calls, which stood a threat of exploding if Reliance volume started to build and made a big up move. But Bank Nifty not showing any strength. IT as well. Now, after being at the day's high just 10 minutes ago, is um, really taking a dip. Now, these puts haven't expanded much yet, but at the same time, they will expand if we start heading to 15,800 on the spot. They will very quickly put on about 7-8 points. So I have risked off half of them. I will risk off the other half if they expand something on the lines of 24, 25. Okay, so one more thing is if you notice, 15,800 put has seen consistent writing, right? So heavy writing and now is almost the same as 15,900 call in terms of open interest. While a lot of people will be like, okay, this is very strong, it means let's write puts. Actually, it's quite counterintuitive. It means that that much supply has been there. That's why puts are kind of cheap now. And if the same thing gets unwound, it will get unwound very quickly. I mean, one way of looking at it, okay, there's been huge OI building, there must be good amount of strength. The other way of looking at it is there's a lot of OI that's been built up today because previously there was heavy shorts by call writing, and that OI can get unwound very quickly in case something goes wrong. So the risk reward of going long when everyone's going long by shorting puts or buying futures becomes lower naturally. Okay, decided to cut the risk on the entire position because with the kind of put writing that has taken place, I am not very comfortable with the potential unwinding that can take place if there's a sell-off. There doesn't seem to be too much strength, but there is always the potential for a continued short covering. So best thing to do when doubt is take risk off on the entire position. So I've exited all my 15,900 calls and moved them to 15,950. I've exited all the 15,750 puts, moved about 60% of my put side position to 15,650 and 40% at 15,700. So this gives me a pretty neat balance all said and done. If we continue to hold above 15,800, then I will move the remainder of the puts up as well to 15,700, and that should be the end of it more or less. On this position, I'll be willing to take like around from where I am currently, probably 1.5 points of an exit. So if I lose 1.5 points from here, I'll just take the exit. Else, I'll just trail it till the end of the day. Okay, so there was a nice down move with a good spike in put options. So this went up till 13, and I used that as an opportunity to actually take on more side trade. Because calls gave up some value, and I'm not expecting a runoff below 15,800 as such. So it betters my equation to just take on additional put trade into that down move. So this is now the final position, and beyond this there won't be any changes here. This is currently trading at about 20, you can say roughly, and 22 will be an exit, and if it doesn't hit to 22, we'll trail towards the end and see how much of a fall off can be captured before 3:30. We'll keep you posted. So one way of translating to how your position is looking versus the rest of the market is clearly there's a lot of 15,800, a lot of positions are here, no doubt there. So a good amount of put writing in 15,850 during the day. So the calls were there, but clearly a lot of this got added, and 15,900 as well. So a lot of the in the money and at the money put writing will be to cover existing shorts. It's one of the ways of covering shorts. You can buy back your own strike, buy a lower strike, buy multiple higher strikes of the same option in the case of call options, or you short the put option which is at the money or in the money, and that will protect your delta in case the call starts to be threatened. And so this is most likely 15700, 15950, or even 15900 is most likely the range that I'm going to keep for my tomorrow's trade as well. And I can carry 75% of this if I want to, even without the 0.33% MIS benefit. But I would never ever in my life consider carrying a trade like that. And yeah, it goes without saying why that is. At least this risk, whatever I've taken, I can cut out of it now, if I want to. Even if there is a big move and liquidity dries up to some extent, I have the ability to cut out of it. Maybe even, let us say there's a big candle, single candle of 100 points right now. This will jump immediately by 30, 40, 50 points. It will jump, yes, but I will be able to cut my loss there. I will be able to get out. And because of the kind of spike that has happened, I will then trail stop loss on my hedge. So I will leave my hedge open. I will exit this and I'll be like, okay, let's see how much I can. Of course, I will take a hit. I mean, it's not going to be the case that I won't take a hit. I will take maybe even a 50-point hit. It's very much possible, but at least it's a 50-point hit. If I hold this overnight and we have the situation, or whatever reason, you never know. This is the market; anything can happen. We open below my hit strike right off the bat. That's complete mayhem, and that's not a situation I would ever put myself in. So yeah, anyway, for now, continue to hold the position exactly as is, trailing in at different points, stop loss of 1.5 points. So at any given point, you can assume that 75,000 if I lose from what my market position is. So roughly right now the exit criteria is if my mark to market heads to 1.5, then I take the exit. So it's just like a slow thing into the day. There's still 2 hours to go and a lot can happen. The premiums themselves are quite low. The 15800 is pricing in at this very moment, is pricing in from 15800 about less than 100 points, about 96, 97 points of move in either direction. So that way these strikes should be very safe and I will keep you posted. Time is 1:30. Okay, so what initially looked like a shakeout move held on for a bit, and then we had an even bigger. So this is the thing, when you have aggressive put shorts happening in the money and whatnot, if something goes wrong, the unwinding can be just as quick. So always be careful of going long in a very positively biased data wise market. And yeah, I wanted to exit at 150, but that was my trailing stop loss. But unfortunately, you don't get that opportunity always in a market where you can see such gamma moves, right? So you have like an immediate expansion of 5, 6, 7 points on the put side. You really can't do too much about it. And once I took the hit, I mean, the idea was okay, the IV continued to expand, potentially look at a re-entry, but decided not to do it because I'd already set a exit criteria and that also got breached. And at this point, I'll just be revenge trading and be like, okay, boss, let me keep at it. So, and after charges should be slightly green to break even day. But yeah, thank you so much for watching, and I will catch you tomorrow for the expiry trade. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.